Commissioner, thank you very much indeed for being with us again. Again, I should say, because you opened up our conference last year when you were relatively fresh still in office at that time. I know in the meantime you've had a baptism by fire, I think, with all the things that have happened. Thank you very much for being with us.
Look, thank you very much, Nick, for the opportunity to join you. And before we get into our fireside chat, I know the temperature here in Brussels is quite warm, so I don't think we actually need a fire this morning. But just to refer to your comments about last year, and certainly I was rather new in the role, but it's been a very exciting year and a lot is happening. And I know we're going to talk about things that are to happen in the future. So it's interesting that maybe in the past, the world of finance was quietly on its own somewhere working away, but today it's front and center of even the whole sustainability agenda. So I'm glad we've had the year we've had, and I'm glad that to some extent the cloud of COVID, which was over us all, is receding, and that hopefully things will be restored to some form of normality.
And you're right, yes, I joked with Sean, your Director General, about everything being fireside chats, and I called one a cuppa with Sean, and he didn't like that much. He preferred fireside chat. But yes, we have to find a different term at some stage. No, thank you. And I agree, it's been an amazing year. And I think actually COVID has kind of brought the issues we want to talk about much more into focus. As well. That's clearly a theme that emerged. And maybe we start with that. I think, how do you see the digital agenda fitting in with all the other things that you're doing, from sustainable finance, CMU, banking union, all the other big agendas that are on your desk and that of your team?
Well, I mean, the simple answer is that the digital agenda is cross-cutting, and therefore in my area, the whole advance of technology and digitalization impacts every single policy area that we have and are involved in, because it creates new opportunities. We have new companies that are starting up, we have new products, new tools. And I think for citizens during COVID, for example, there were new solutions to problems because they couldn't physically access some of the services, the financial services they needed. So I think in a way, the experience of the pandemic has accelerated the rate of change in the area of finance, and therefore the whole area of new opportunities, innovation has really taken off. In terms of our wider agenda here within both the Commission and particularly in the area of finance, we are seeing more choice for consumers, so that there can, when we look at our CMU package, for example, we're wanting to make our citizens more savvy about investments and to look at investing in the single market. I'm trying to avoid using the words cross-border because I want us to think single market. And so I think that's a real advantage of the whole digitalization. It is transforming our economies. I think that's very clear. One of the downsides, of course, with all advancements, there are risks here. And maybe one of the risks are associated with speed and access, so that you can make a decision before you wake up practically in the morning on an app to do something around finance. It can be a good decision if it works well. It can be a very bad decision if it's ill-informed. So I think what we're looking at is how do we have the right level of regulation so that we encourage all the innovation, which is really super. And in Europe, there are lots of very innovative companies, but how do we keep it safe and make sure that the innovative side can thrive, but we account for the risks that are inherent in the system.
Thank you very much indeed. And maybe, I think as you talked about managing the risks, it's maybe a nice segue into one of the two legislative proposals which are going through the co-legislative process at the moment, and where actually you had your first trilogue in Strasbourg a few weeks ago, which is DORA on operational resilience. I understand why you started with that. You want to put security first before you look into other areas of rolling out technology. But some people ask, why is there a need for a sector-specific financial services piece of legislation? We've got the NIS directive, the Network Information Securities Directive. Please go ahead. Yeah.
You're right. We do have the NIS directive, but it's not enough. I think that finance has some particular features So I think it's very appropriate that we do something specific. I think DORA was an initiative before I arrived here. I think it's really timely. If you look at what's happening in Europe and globally, cyber threats are incredibly serious, and they're also very frequent. And the financial sector takes many of these hits. So I think if you look even at some of the more recent ones in the member state I know best, we have had ransomware attacks impacting the health system. So it's not just finance, but also other systems that are attacked. If you look to finance then in particular, more and more finance is becoming more dependent on digital solutions. Very interconnected. So we have millions of payments, daily, and securities transactions as well. So I think that looking at making the system safer from threats is absolutely vital. And it's not just a one-day piece of work. It's something that has to be continually worked on so that we are ahead of those who want to attack the system for ill-gotten gain. I think when it comes to finance, one of the other things is we have a fully harmonized single rule book for finance in Europe. So that's why this DORA initiative is appropriate for the financial system. And yes, I was present for the first trialogue, and I think there's a very good basis to get this over the line in a timely way. I think the rapporteur, Billy Kelleher, and the French presidency, they know that they have our full support. They also know the importance of this piece of legislation. So I think it points in a very good direction that we will have an agreement reached between the co-legislators relatively soon.
And maybe let me follow up on that, because that's one of the big conundrums we have in cybersecurity, and that is between proportionality and managing risk. A lot of smaller institutions might struggle with implementing DORA, but on the other hand, the system is only as good as its weakest link. So how do you balance proportionality and security in this piece?
Yeah, I think it's a very fair question. I think the truth is that all financial firms are exposed to risk, but they're not all equally exposed. So it does depend on the size and the function and indeed the business profile of different companies. Smaller, less connected firms are, not likely to face attacks from highly sophisticated actors. When we look at DORA, it covers all financial entities, but the requirements are very much tailored to the risks of those specific entities, including size and business profiles. So if you take the example of small advisors, protecting, indeed, look at ourselves here, trying to protect our passwords. Those things that, we do as individuals applies equally to everybody, including business. So sometimes very basic actions around security of passwords is really key around cyber security. But if you look at what the work of both Parliament and Council in relation to the proposal, they have made it even more proportional, and we're happy to support those moves. So it was certainly one of the issues that arose in the discussions.
Thank you. Maybe one last question on DORA, and that takes me to what we've been discussing a lot yesterday, which is parameter expansion. So the role of supervisors, financial service supervisors going into the technology space and having some form of supervision or oversight of of technology companies. I think DORA is leading the way in creating this oversight framework. Mm-hmm. Which is not quite supervision. Do you see it very uniquely to DORA, or is this something that you might want to explore also going into other areas going forward? We talk about breakup of distribution chains, for example, more and more technology companies entering the space without having a license. Can we learn something from DORA?
Well, I mean, in a short answer, yes, I think we can. I think this area, and you will know of, and this audience will know of, technology, digitalization is changing as I speak. So one of the things we have to be very mindful of is that whatever we put in place, that it is appropriate for this future focus, as you suggest, companies coming in that may not be regulated. One of the other points, if you look at DORA, it does say that a bank using cloud service providers to hold data on deposits and processing payments, and then the supervisors can therefore ask the banks to manage those risks. And I think the supervisors also have to have the power to directly oversee those very critical third-party tech providers, get the information they need and make recommendations. And equally, I think supervisors need to be tech savvy themselves. I think the skills base of the supervisors will have to more and more include this future focus on technology and how it evolves. And DORA does itself build on precedents. So if you look at the practice of oversight applicable to SWIFT, it also takes some inspiration as well from law and practice in the US. And I gather you will have a discussion later around US. So I agree that we need to make sure that distribution through platforms doesn't undercut our rules, for example, on investor protection. And this is an area that we focus a lot of our attention on here. How do we apply the basic principles in the offline world to the online world? So in other words, we don't want to see less investor protection, but how do we make sure that there is full protection of investors as there would have been in the offline world? And I do think we need to understand if financial advisors already have the power they need, or, and this is a question that we all need to be mindful of, are there loopholes? It seems to be almost inevitable that with such a fast-moving evolution of technology and services that there could potentially be loopholes. And that's why we've asked the ESAs in our call for advice to look at these questions and to analyze, as we will, the answers that we've just received from them, because we need guidance and we look to the ESAs for that guidance and advice.
Yes, I think that's a very impressive document, and we're still trying to read it and analyze it as we're running the conference at the same time. And José Manuel Camper has already given us a preface from a banking perspective. But you raise a very interesting point, Commissioner, which actually wanted to bring me to MiCA, the other piece of legislation that's on the table. And that we had a very interesting discussion last night on crypto assets and what to do. And I think what I took away is, A, that MiCA is well received, but which is nice to hear, and Marcel was very happy to hear that. But I think there's a tension between a single rule book and a very complex market, which requires supervisors to have much more discretion, guidance, and abilities to act on a case-by-case basis. So how do you envisage, let's say, once MiCA has entered into force, supervisors actually applying it? Because if I put it, as soon as financial institutions use certain crypto assets, they effectively fall into scope of MiCA. So it's a very fluid design structure.
Okay, I should have eavesdropped on your conversation, but I think it's a conversation that's happening in the public space because more and more people are becoming aware of all of this discussion around crypto markets. I think there's a younger generation less worried about them than perhaps those of an older generation. But I think it's really important to stress that while there may be opportunities here, there are also significant risks. Our first and really important task is to ensure legal certainty for crypto asset service providers, and that the risks that we are concerned about are properly regulated. That's the very core of the MiCA proposal. So a year and a half later, we're hopeful that the Parliament and Council will agree in trialogues still under the French presidency, because I think time is of the essence here. I mean, recently, as we've seen, what goes up can come down and crash quite significantly. And those who may be losing money perhaps are not able to take this loss. And that's why we need to manage these risks. And therefore, MiCA has a huge responsibility there. The other point, perhaps it's worth saying that, the area of money laundering, and we're really concerned of the role of crypto in this criminal activity. And as you know, we have a very strengthened anti-money laundering package currently on the table as well. I mentioned the word borders earlier, but in fact, with crypto markets, there are no borders. And nobody in crypto thinks borders. So I think it's good that the basic principles of MiCA are also shared by international partners, even though they might have different tools to actually implement. And I really do think we need to step up international cooperation on the regulation of the crypto sector. And, from a supervisor's point of view, it's very clear that MiCA will bring new challenges around know-how, as I've said, all of this advancement. But I think that supervisors are, certainly already and will quickly catch up with what is required here, because many have already been looking into this topic and they're sharing their experiences with the ESAS. So again, it's about making sure we manage these risks that are new in an evolution of the crypto space, which is not entirely new, but I think it's becoming more visible. And therefore, some of the risks and concerns around it are also becoming more visible.
Thank you very much indeed. Maybe taking it from cryptos to CBDCs, central bank issued currencies. Now we're waiting, of course, for a formal decision by the executive board of the ECB, but work is going on. And I know that you in the Commission are working on it. How do you see the current cooperation between the ECB and the Commission on this and going forward over the next year or two?
Well, I mean, on this very interesting area, because Europe is clearly looking at digital euro, but across the globe, there are many other central banks investigating this, including the Bank of England, and the US are looking at it as well. So when it comes to the practical issues around our work together, we're working, my services, with the ECB very much hand in hand. Because we do need not only my services, but other services here in the Commission, including the legal services, to interact with the ECB. And I think some of the questions that we're working on trying to answer, when we're looking at this new area of a digital, euro, is how do we make the most of a digital euro, including around financially excluded. How do we make it work for this discussion we're having around digitalization of our economy, and what is its role in terms of this big policy agenda of open strategic autonomy? Other questions around distribution. So who will actually distribute the digital euro, and what will the private sector role be in this area? How do we fully analyze potential impacts on the financial sector? Some may be negative, and I think there are some concerns around that. And one of the big issues that arose even in the ECB consultation was around, protecting privacy and also money laundering rules. So I think there's a lot of questions that we're working through, including, of course, the whole design and the technology behind this. So we're working, as I said, very closely with the ECB. And this is an issue, I recall, a lot of ministers in the finance ministers really, really interested that this works and that it happens rapidly. But clearly we need to do the spade work, the groundwork, before we would actually go to seeing a digital euro, if one can visualize a digital euro. Our cooperation works well with the ECB. That's really, really important. When it comes to responsibilities, of course, the ECB would issue the digital euro, but the Commission would have to provide the necessary the legislative framework for that. So, it's really an exciting piece of work. It's a global phenomenon, and I think we can look to what's happening globally while being conscious of the need for Europe to do it as Europe does in its own way.
Yes, and I think you raised the point about ministers. I think in March or April, finance ministers will reinforce again their commitment to the process. But it does raise a question of timing. And you have said in the European Parliament before you became commissioner, so you know what I'm talking about, which is at some stage we come into this period where we get into pre-electioneering, and it becomes harder for the Commission to submit new proposals. And then we have got this interlude. Yeah. It's a bit off. But if we look at the timing of when the ECB takes decisions, and then if you want to flank those by legal measures, we're running into this timing issue. And if we wait until 2025, as you say, technology has moved on. So how, without kind of looking into the crystal ball, how do we manage these timing issues around that transition period?
Well, I think the first really important point is our goal is to table a legislative proposal in early of 2023. And I think that would allow enough time to negotiate the proposals and ensure that they actually enter into force. So we're conscious, as you pointed out, about, timing issues. So if you look at the deadlines then, so October 2023 would mark the end of the ECB's 2-year phase of investigation. But it doesn't mean that we would expect to see the ECB issue a digital euro in 2024, because the development phase of the project would start then and could last perhaps 2 years or so. I think you're right to say that the timing is tight. We're conscious of that, but we're working hard to meet those deadlines and to ensure that the process of the legislative phase will be as smooth as possible. If you look at what we're doing, complementing the public consultation which the ECB ran last year, we also would be issuing a targeted legislative consultation in the coming weeks to prepare the Commission proposal. So I think I'm confident that we will do our work and that the co-legislators would prioritise work on the digital euro. I think this is important for members of the European Parliament and of course for the Eurogroup. So it's certainly something that would be anticipated, and we're conscious of timelines and therefore we will be ready to act.
Thank you. Maybe changing tact a little bit to the advice by the ESAs that you already mentioned that came out on Monday. I know we're still analyzing the text, but what would be some of the key conclusions or observations that you take away from a Commission's perspective, some of the learnings from the first day or two of having looked at the response?
Well, as you say, it's very fresh, it's very new. We received it just a few days ago. And I think to the credit of the ESAs, they've done great work to map what's actually going on and how financial supervisors can stay on top of what's happening. The documents, the ESA's documents show that many actors are involved in delivering services to customers, and that financial firms, as we are discussing, are increasingly using digital platforms to market and distribute financial products. The ESAs make clear that some of these developments are still in Europe at a very early stage. But if you look at what's happening elsewhere, the trend is here to stay. So we would really do very well to stay ahead of the trend as supervisors and regulators. And this, again, is about how we think and how we are future focused. So you rightly say, we've just received it a few days ago. There's more to come. So advice on lending will come in the springtime. And we're now working to analyse, as you are, the actual advice that we've received and to see what we need to do from our side. And we're open here. We don't have a fixed mind about whether we will need legislation or indeed whether a non-legislative intervention is required. But we will work hard and fast to try and come to some conclusions from the advice we've received.
I think the advice is, and the initiative around the advice is very smart, because it was actually one of the triggers for this conference many, many years ago, which is to what extent the technology is challenging the regulatory framework as we've designed it over the last 30 years. It is very clearly designed in home host, wholesale, retail, different distribution models. It's very neatly categorized. But technology is challenging all those different categorizations. So do you see technology challenging the overall design of the European regulatory framework to financial services?
I think you can look at this in two ways. Technology can challenge, but it can also enable. So I think in as far as the financial system in all areas is now driven by technology and new products and new companies, new innovations, I think that on the regulatory side and the supervisory side, we need to use the very same tools to make sure that the work is up to speed. So I think this goes hand in glove. But it is and will require us all perhaps to think differently than the past. So when there wasn't technological developments, and it's hard to remember a time when there wasn't, things moved more slowly. And therefore, if there was a problem, it might evolve slowly over time. I think today we have to think in nanoseconds to some extent because of the rapid change and then the offers that are being made. So, technology can disrupt in a positive way. It can also disrupt in a very negative way. And again, I make the point that if you look at how easy it is with your mobile phone to do so many things, including in finance, so it's not as if you physically go somewhere to make decisions. You can make decisions at your kitchen table and you can make them quickly. And therefore, we need to be mindful, those who are supervising and in the policy space generally, that whatever we do has to have a future focus but also we may need to react at times more rapidly than perhaps would be the norm. I would say that having worked in the European Parliament as a member of Parliament, we take time with legislation, and that's appropriate. But equally, when Europe needs to act fast, it can. So I'm still confident that whatever technology throws up, and including competition with big tech, that we can react fast where that is necessary. But equally, to stress that the tools of the financial system, the industry that they're using, are also tools that supervisors and regulators can use, which is about data and information, and making sure that there is quality information and that it is accessible.
Thank you. I would like to finish on two subjects, if that's okay. And you just raised the issue of data, which brings me to open finance. And I know you mentioned that at the Investor Education Day the other day as well, organized by the joint ESAs. But where do you see the opportunities emerging out of open finance? Customers sharing at their own request data more broadly with different providers?
Okay, first thing about data, we all in Europe are very mindful of that it's our information, it's our data, and therefore it is under our control whether we share or not. But I think when you have access to data, you can then see that the industry will respond with particular products or indeed information, which now you see bank accounts being much more specific, telling you if you like to see it, what you're actually spending money on, etc., and comparing one with another. So, small tools like that are very useful for individuals and indeed, I dare say, companies as well. This area of open finance, it raises lots of issues, but it certainly is an area that we're working on. We've presented already the Digital Markets Act to open up access to e-commerce data held by big technology platforms, because one of the points constantly put to me is that, the financial system banks have shared information. We've asked them to do that, but they say that on the other side, they're not getting access to information. So we do need to have a level playing field. I suppose another important point, we have to ensure that the financial service providers, so whether they're already existing, whether they're fintechs or indeed big techs, that they're all fairly regulated and supervised, and particular with regard to consumer protection and maintaining financial stability. They are very key areas. So one of the things I want to stress again is the importance of the advice just received from the ESAs. And this will allow us check to see if our regulation is fit for purpose for tech companies.
Thank you. Let me maybe finish on instant payments, because I think together with Open Finance, you've made some commitments that there would be some policy decisions later in the year. And of course, this is seen as another European initiative that feeds into open strategic autonomy and giving Europe more capabilities in the payment space. Maybe you can elaborate a little bit on what you're thinking about in the instant payment space.
Well, look, instant payments should already be available for everyone to use. We know that they are, but in a limited way. And we've looked at this in great detail to see what we might do in order to make instant payments a reality and the norm rather than the exception, because it does offer advantages for retailers, for merchants, for consumers, across the board. There are huge advantages here. So I think that this is a real priority for us. And we have announced that we will deliver an initiative on instant payments. And one of the things that I need to stress is, despite the fact that some progress has been made by the sector, I think it's going to take far too long for the market alone to arrive at a place where we want it to be. At the current rate of progress, we've analysed it would take more than a decade to get to a full instant payment rollout in the European Union. And frankly, we cannot wait for that to happen. We have to be proactive. For me, I'm really convinced that only a legislative proposal will accelerate the availability and use of instant payments in the European Union. So really happy at your forum to confirm that the Commission will present a legislative proposal on instant payments. It will come in the second half of the year. And I see this as part of another of our flagship Single Euro Payments Area project. And the legislative initiative will cover all the enablers that are vital to reach our goals. So on this, watch this space, and I think there will be a broad welcome for speeding up something that really is needed today, rather than waiting for the market itself to eventually get to a place where we believe should happen much more rapidly.
Well, that is indeed quite an announcement, because that is a change to what I've seen so far, a clear commitment to legislation. And therefore allow me, despite us running out of time, just to ask a follow-up question. It might be too early, but what might this piece of legislation look like? Clearly an amendment to the SEPA regulation, as you just said. Maybe also amendments to other pieces of legislation, like the Payments Accounts Directive. Anything you could tell us already about the shape, and also maybe the timetable, because it's not just about making it mandatory, but it's also at what point the industry will have to be ready to actually comply.
Well, I know that once the announcement is made, people will want to see the details. So I think I'll be very short in reply to your question. We're working on all of those questions that you have raised. I think it's enough to say with great clarity that legislation is coming. It's coming soon. And I think that will focus minds in the financial sector about our very serious intent on instant payments. And that may already unblock some of the difficulties that are there, because the legislation will require that instant payments becomes the norm, not the exception.
Thank you very much indeed, Commissioner, for being with us. It's been a real pleasure. I'm always impressed by the lucidness and succinctness and the way you capture these issues, having done it for now, well, a year and a half, but still a year and a half. I'm really very impressed. Thank you so much for being with us. And I think it's been an excellent way to start the second day. And I hope you can be with us next year, hopefully maybe even in person. That would be a great pleasure.
Well, I look forward to that. And thank you for the opportunity. And I wish you all a very good conference.
Thanks so much. Have a good day, Commissioner.
Thank you.